That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheaper.
Ladies,
I'm not fucking leaving!
gentlemen,
Sell it all.
buenas noches.
It's
Hola, señores, señoritas.
Welcome to the fucking show.
Chris Patelitas. All right, everybody, welcome back to another episode of the Cashflow Chronicles. We're here with Mr. Patel, always here on time, never late.
Always late.
Things are going well over here at the Farley family office. Can't complain. I feel like I do so many streams now with Steve. It's like I feel like I can't talk without doing this thing. So don't do anything stupid. Don't follow anything that me and Chris say, because I don't know what I'm doing. I'm just trying my best. Mr. Patel, how are you doing?
Yeah, he starts it off with that like disclosure, like this is not financial advice and all that stuff. But you know, it's fine. Just it's not financial advice. Don't buy anything that we talk about because you know you might actually make some money if you do. But if you don't, that's fine too.
Well, I think that so somebody says it's really good. It's Tanner says it's really well. He says you can't borrow conviction. So many times I hear people that like they'll buy something because I'm buying it and I've made money in other things, but not necessarily fully comprehending why I'm buying it and for how long I'm buying it. They just hear a ticker and they don't hear the context, they don't hear the background, they don't hear how long. So a prime example, somebody that I've made lots of money in other companies just because I think they were buying it regardless, but they stumbled upon me, they got more conviction, they bought more, etc. They were like, oh, like Matt obviously has the same sort of theories within VG and Next and things like that. But, some people don't have the patience, right? And those things I think will take time to pan out to be, the potential 5 to 10x opportunities that can be there. But they want money today. So, sometimes people don't want to wait around and I can't make that happen for you, right? I can't say, hey, it's going to be potentially 10 years before you really start to see the fruits of the labor, and then you buy it and you want it to be a 10x in the next year. Like I can't do anything for that. That's just not it. So,
All right. Well, let's get started. What do you think about this whole situation with Iran, and how do you think it's going to impact markets? What are you looking at in terms of investing, how to hedge yourself if the worst case scenario comes and we end up in a ground war? I mean, I think that would be the worst case scenario. So what's your opinion on the whole thing? Like, how are you positioning yourself for the rest of the year, knowing that we have this giant like curvature in the trajectory that we probably did not expect going into this year?
Well, I don't. That's a good question. I'm not really doing anything differently. The thing I would hope to be able to do is take advantage of anything if it were to drop. So I have a decent amount of cash, and I'll get some more cash later this week. Just based off of the things that I've been able to kind of sell. I did take an opportunity to kind of swing trade a few things in the recent past, and so the cash pile has built up a little bit as I've offloaded some of those. So like I bought some Symbotic when it would dip down. I bought some ServiceNow when it dipped down. And so now that those have kind of been sold, and coupling that with some covered call premiums that have kind of come in, sitting on more cash than I have in quite some time. And then I get a bonus at the end of the week. And so it might just be an opportune time that if this happens, it persists, and it does actually go the wrong direction, that I could buy stocks cheaper. But as always, I'm not really trying to, unless I see something very opportunistic, I'm not really trying to make anything out of nothing. And to me, I'm always looking at it like, how can I add to the positions that I do already have and take advantage? Like Symbotic being down at $50 a share is awesome for me. I bought some more this morning because I had some additional money kind of coming through, and so I was like, you know what, at $50 a share, worthwhile to potentially own up on that.
What is Symbotic? What do they do, and why do you have conviction in it?
So Symbotic is a warehouse robotics company that basically not replicates, but is, a lot of people are very bullish and they've seen Amazon and their warehousing and how full of robots it is. It's very comparable to that, but obviously it's not Amazon. It's working with Walmart, it's working with Target, it's working with a lot of or will be working with a lot of other companies. They did a deal with SoftBank as well to kind of leverage some of their infrastructure pieces. And so for that, I think it's not a cheap company by any means, and it's run a little bit, but it has the opportunity to maximize the warehouse space. And to me, I think that is part of the reasons why gross margins have been going up really well in Amazon. And
Mhm.
if it was the case where they could leverage that at Walmart, leverage that in other places, then you'll potentially see some good revenue coming from the company. And
Mhm.
so more people wanting to use it, because the more you can maximize, the less additional footprint you have to get. The faster you're able to do it, the more space you're able to utilize, so your cost per unit goes down for storage costs. So yeah, I mean, that's just kind of the hope. And so instead of Amazon only having sort of warehousing like this, you're also going to be able to use it for places like Walmart and others. And the thing that's nice is, as you're kind of seeing here, yes, there's kind of like the manual piece that these robots are kind of doing, but
Mhm.
you can see it's going on a conveyor belt. Well, those conveyor belts run throughout the entirety of the warehouse, and then as you're seeing, you don't have to put these massive forklifts, right? You have these kind of really optimized, and so that might mean that you have a couple more rows of things rather like this. You don't have to have a forklift that can turn around. It's basically designed to be much more useful space, and they're on these tracks, right? So instead of it being a forklift that you need, let's just say, an additional 5 or 6 feet in between, you'll be able to get way more rows and therefore have much more storage and utilize much more of your warehouse space. And the thing that's nice is you can get it up and running in stages. So you don't necessarily have to do your entire warehouse at once, unless it's a small warehouse. But you can potentially do it in threes. And so in that respect, if you're doing it in threes, then you can bring down your entire operation in 1/3 of the spot and be able to set it up and gain efficiencies almost immediately while you're setting it up, and really not have any downtime over the course of some time. But right now, I think it's in like 50, or starting in like 50 Walmarts. It's been building over time. Now Walmart, I think, allowed them to go nationwide with them. And so that's a positive and negative, right? Because you think about it, they've got one of the largest retailers in the United States, but that also is bad, right? If they lose that, that's obviously a huge piece of
So they have customer concentration risk.
Exactly. So it's a plus and minus.
Got it. Yeah, I mean, it's a interesting thing. I just never did the real homework on this specific sector, because it was just one of those things that was on the sidelines for me. But seems like they have, take a look, just share the screen. So it looks like they're expanding pretty rapidly. So operational systems in 22 were maybe like 1, 2, 3, 4, 5, 6, 7. They're going up, and now they're deploying all over the place. So this is definitely a growth. Wow, non-green box. So they are expanding, and then there's, of course, more potentials across the globe. Do they have any competitors that are worth like, worth competition that could end up, like taking out some of their margin? Well, so they have like a lot of patents too, I guess. It's always good to see things like this, believe it or not, because as much as I like robotics, and I see like a lot of companies, they're doing this humanoid robots thing. The one thing is, a lot of the stuff that they have, I'm not sure how many patents that they have. So whenever they have patents like this, it tends to help like insulate some of the moat that could be created. Wow. How big is this company market cap wise?
30 billion. Yeah, 30 billion.
Okay. 30 billion. So they're, and
not cheap, but they just hit profitability. This is a little old, but but they just hit GAAP profitability, and they have some pretty decent as you'd expect, right? With depreciation, robotics, etc. Lots of depreciation, which obviously impacts your gap profitability. And so, yeah.
Let's just take a look on Fiscal AI and just check out like their metrics. I think, or we can use what is it called? Probably. And we'll use that next. Yes. So SIMB, Symbiotic. Okay. So first, their just revenue has just been going up, up, and up, which is always good to see. They're projected to do almost like 4.5 billion in a couple of years. That's always good to see that the revenue growth is. I mean, it's slowed down, but now it's kind of like it's leveled off. So that means that this is good. You know, you're not seeing any like major declines, or at least they're not projected to decline anything major. Let's see, basic EPS. Yeah, EPS is going to grow over the next few years. I mean, not a bad thing, Matt. It's actually pretty cool. Interesting. Let's see. Their EBITDA. Yeah, so they're profitable too. So the chances of bankruptcy are off the table. What's the timeline that you're looking at in terms of like value for a company like this?
You mean like holding it?
Yeah. Like, is this a long-term play for you, or is it just,
yeah,
hey, I'm going to be in it and out?
No, yeah. I mean, as far as I'm aware, they're kind of the leader other than Amazon and warehouse robotics. And so my thought process was, and I've wanted to get into robotics, period. But so the thought process is like, well, what are you exactly getting into? And you know, how is it helping, you know, continuation of robotics? And so my thought process is like, well, what exactly am I going for? And I kept thinking, like, do I invest in humanoid? Do I invest specifically in AI? Do I invest specifically in, let's say, warehouse robotics or something? And I kept just coming back to this company. So it just
so here's a weird question, but maybe you know, what is the business model here? Do they rent the robots out to these companies, in which case, you know, they're paying like a fee, or is it they sell the robots and then like they manage them? You know, like, is this like a hardware sales business, or is it like, you know, selling hardware and then incorporating service contracts into it? Because like that's how a lot of these hardware manufacturers are, right? So there's two parts to the business. They've got the actual sale of the robot or the hardware component, and then there's like the servicing piece, right? So because you're always going to need new parts, you're always going to need, you know, updates to the software, you're always going to need like all these additional things. You need consultants to come in and train people, right? So that's the business model that like a lot of healthcare manufacturers like CT machines, MRI, that's the one that like I'm familiar with. So what's the business model here?
Precisely. You hit the nail on the head. So I think the thought process is you pay for all the robotics and infrastructure over the course of a couple of years. And then once that's kind of paid off, there's the kind of software as a service piece where, like you stated, there's kind of the maintenance aspect of it. So at that point, I believe that they own, whoever you're kind of building it for owns the robots, and they can kind of, you know, they could, you know, bury them if they want. I mean, whatever the hell they want to do. But obviously they're not going to, because of the efficiencies they'll be able to gain. But the real, I think, revenue driver and the high margin shows up once you actually start to get the software up and running.
Yeah. I mean, that seems to be like the business model that everyone is adopting. You know, like long gone are the days where you could just buy one piece of hardware and then you could just hire a third party to service it, right? Like, I'll tell you, in my hospital, we have, you know, we're always buying new medical equipment, and all the new medical equipment comes with certain proprietary like lockout features where you kind of need them to come in to service the unit. And you can't, like these third party guys, they can't do it. So it's almost like with a car, you know, like imagine right now you bought a Toyota, right? There's only, not a Toyota, a bad example because Toyota is actually pretty repairable, but let's say a Tesla. There's very few places that can actually repair a Tesla outside of the Tesla, like qualified service centers. So what ends up happening is now all the parts that you get for Tesla are going to be like OEM parts, and that's where you actually make the real money. Like the margin is coming from there. So I'm guessing that these guys, that's the business model. And so one, you're probably going to lose money on hardware sales, but that's going to be in the front end of the adoption phase. But then once like you become the default among all of these guys, it's really hard to rip out, right? So that's like one of the best parts about a business like this is that if you do have a partnership with the Walmarts and the Amazons or whatever, and then you become kind of integrated and you get integrated fully, like it's not one of those things where Amazon can decide, hey, listen, we're just gonna, switch you guys out, So yeah, I think you may have something of a nice long-term investment here. The only thing that I would say, I wouldn't say it's a concern, but it's just the cost is rather expensive.
It's
But
not
with a
100%
yeah,
cheap. That's for sure.
right. For a business like this, I mean, that's what you're going to expect on, and it's had a few years where there was an accumulation phase, like when it first IPO'd. I guess it SPAC'd at $9 and then kind of fizzled out after everything, and it's kind of come back since, and it's gone to like the 87s in the past. So there's still volatility here, depending on, like, I'm guessing like one-time contract events and stuff like that, where people get uber bullish on these things and they kind of get bearish. And then, so this is definitely not a stock for people that are into like the non-volatility, I'm guessing, right? Like it's gonna, in your portfolio, it's definitely gonna have its ups and downs. So like if you get an example compared to like something like waste management, you can see is like an up and to the right business. You're gonna become a millionaire overnight with these guys, but if you're patient and you hold on to it, look at this. So you could have bought waste management at like $60 in 2016. 10 years later, that would have turned to like $236. So that's like what, like 10 years? So what's that CAGR? That's like 15% per year CAGR, right? Which is
Waste
like
management's been a great one.
Yeah, I mean, and waste management, one of the things about it is that long term, like if you're past your 20s and you're not trying to find the next 10, 15xer, like businesses like waste management are perfect for a portfolio, for like long term. This is a business that it can't get disrupted by AI. I don't really see any major disruptions to these guys. So, but once again, you're CAGRing at a 15% per year, which I think for some people, when they see that, they're like, oh, only 15% per year. That's bullshit, dude. I don't want that. But it's like, yeah, if you take it over the last 10 years, that's a 300% return, but some people, they want that 300% return in like a year. And if that's what you want, then I'd probably, go with something else. With regards to Symbotic, though, let's see. Let's just look at it like purely from a valuation standpoint, not potential, just today's valuation. Like, so we're looking at, let's do two things. So let's look at EBITDA first, right? For a company like this, and then we could like compare it against another industrial that's in a very similar kind of situation. So the EBITDA on this thing, I think like September of 2028, it's projected to be about 744, right? Most of the time with a company like this, you're looking at about 10 times EV to EBITDA. Do they have debt on the balance sheet? Let's see.
I'm trying to remember. It's been a month or two since I looked at it.
I'll take a look. Payables. Doesn't look like they have a lot of debt. No, they don't. They have, the only thing they have is like current liabilities. I'm guessing just inventory and stuff, but they don't have any long-term liabilities, which is good. That means that most of the funding that they've done it outside of their debt markets. So that's always a good sign. So you're looking at a pure return. So at 744, let's say conservatively, you could pay probably like maybe 15 times EBITDA for something like this in 2028. So what is that, like
times EBITDA? Oh, you mean because it's in 2028? Got it.
2028. So yeah, so it would end up being like $28 billion roughly. Like not 28 billion. It'd probably be less. It'd probably be like, I don't know, 15 billion, right? With seven, like let's say. So once again, definitely not cheap. So, but then again, if they are generating EBITDA like this, then they could end up buying back a bunch of shares. And if they buy it, do they have a share repurchase program right now? I doubt it, because they're not really making that much money. So net issuance, yeah, they're issuing shares, but they're not buying back. And their share-based comp is what? Yeah, their share-based comp is up there. So let's see. That's depreciation. I don't care about depreciation right this minute. I do care about share-based comp. So yeah, share-based comp is up, but I mean, they're performing. So yeah, I mean, I like the story. I don't like the valuation, and the market cap's 30 billion. So I think it's probably fair value, if anything, like even from a potential standpoint.
It's not dirt cheap. And I
No,
think
it's
I initiated at like the mid 50s. So buying it at 55, and then buying at 50 this morning, and then hopefully I can get some in the 40s. I think I bought a few shares in the 40s recently. A couple shares, it wasn't a lot, but that's kind of my hope, is that, you know, it kind of stays sideways. I wasn't buying in the 80s. I thought it was too expensive, and so
yeah.
Um,
And just to let everyone know, remember, these things are estimates, right? So estimates are exactly what they are. They're estimates. So they're estimating, according to analysts, they're estimating that by 2028, this thing is going to hit about $4.5 billion, right? But that's what the current estimates are. Let's say they get a contract from NVIDIA tomorrow, and the entire thing is based on, like, you know, getting a huge boost of ownership from NVIDIA because they see potential. This thing could run up to like $100, $200, you know? So it really does come down to what the current estimates are. And then if there's sort of any major sea changes in their business model, or just the demand of their product, and if that ends up changing, it could work. But this is definitely not a value play. This is a growth story play. Let's just go with that, right? So
I initiated it in January 2027. Sorry, January 27, 2026. At $56, and then since then it's mostly been in the mid 50s, like I stated.
That's good.
Until this morning, I bought it $50 even.
To be honest, brother, I this one might be a great one to sell options on. The volatility is probably, the volatility right here tells me that the IV on this thing is probably pretty massive, in which case you're probably able to sell some really far the money calls for super cheap, you know? And even if you wanted to, you could take some of those premiums and sell puts against it and accumulate shares that way too. So it's kind of works in your interest both ways.
Yeah, I am selling puts at the $50 range as well.
Yeah, so that's not a bad way to leg into it slowly. I don't think that this is one of those things that gets automated at, you know, any level. I'm personally not gonna buy it, only because I am not the biggest fan of hardware companies and hardware businesses.
I get it.
Unless it's something that's like super large hardware, super large business. Like those are different. But I don't know. Maybe I'll revisit this at another time. We'll see.
Yeah, I mean, I think you hit the nail on the head. It's definitely not dirt cheap, but my thought process is it's robotics, and robotics are hot right now. And hell,
Yeah.
I'd love nothing more than robotics to cool off a little bit and be able to accumulate in the high 30s or even mid 30s if it really cools off that much. But I just feel like it might not get there.
I'd probably put it into the radar for me. Like if there's some sort of major catastrophic event in the markets and this thing sells off, this could definitely be something that is worth picking up on the cheap, you know? But once again, there has to be some kind of event that has, you know, lets that happen. So, I mean, we'll see what happens over the next couple of years, but yeah. Yeah. Any others that you're looking at?
I'm waiting for you to drop the bomb on your favorite company at the moment.
Which one? I have a bunch of favorite ones.
The one you told me about yesterday. Or is that a Patreon exclusive for the moment?
There's no Patreon. Which one? You tell me. There's a bunch. Oh, you're talking about Blue Owl Capital?
Yeah.
So here's the thing. I'm still in research mode on this thing. And the thing is, because it's in the private markets, I don't know what the fair value is worth paying. I see the trajectory. Okay. So Blue Owl is for the operating business right now, it's really good. Okay. And it's projected to do really well as well. So it's literally, you can see that the revenues are climbing, EBITDA is there. It's a business that, is about a lot of relationships. Private credit is a little bit difficult to invest in right this second, only because you don't know if they have any sort of issues that may be underlying the business. And I think that's what's keeping investors away. And I'm asking myself, do I trust management in making sure that they've invested in good credit, right? And that there aren't cockroaches in their credit pools. Now, it's really hard to tell when it's public, and it's extremely hard to tell when it's private. And the thing is, unlike some of the other ones like Apollo, they don't have a track record just yet, other than the management comes from KKR and Blackstone, which is always good to see that, you have experienced operators, and it's not just some mom and pop running the place. So I'm thinking about it, and I'm just like, the opportunity is starting to come up with some of these private equity and private credit firms. Now the question is, where do I want to invest in it, and which one to look at? So, it's an interesting dynamic on how to go about this. But Owl is getting to that level where it's getting just very, very oversold technically. And I think if there isn't any other news around any other redemptions over the next couple of quarters, this thing could bounce back. Private credit and private debt equity, they've had multiple periods in its history where they've kind of been, oh my God, this thing is going to blow up. No. And, it just doesn't work out that way. And they end up surviving. So the challenge that we're running into right now is this a liquidity event or is it a credit event? 2008 was a credit event. Right now, it was a credit event that turned into a liquidity event. So these guys right now, people are looking at some of the fringe deals that may not have done well, like, like Tricolor and shit like that. Like, let me see, Tricolor. Like right here. Like all these financing companies. Well, one of the challenges is that people are saying, well, if there are a lot of loans sitting in these asset pools that these guys control, then what could be the contagion? And so some people what they're doing is they're asking for their money back, and they're asking for it on their retail like product, which is a little weird in that it's not necessarily like permanent capital. Like, these guys have a lot of permanent capital, which gives me a lot of confidence. But at the same time, if you start to see like redemptions accelerate, then it could be a problem. So, like I said, I'm still doing my research on Blue Owl, but we'll see what happens.
What is the ticker symbol for Blue Owl?
Owl, OWL.
OWL.
Yeah, we definitely need to research it. Just make sure that we understand we understand what we're getting ourselves into, whether this is a liquidity event or whether it's just a credit event. Now, here's a couple of things that give me a reason to be bullish on it. Number one is there were a set of loans, so when they got hit by redemptions, there were a set of loans that they were able to sell at full par. So it just means that there is actually interest. Now, quarter of that value went right back into their own funds, which is a little shady. So it's a little, can't say this is like the best thing ever, but overall, the credit markets are one of those, especially in the private side, are one of those things that they're not nearly as bad as they were in 2008. So what happened, and just to let everyone know, what happened was back in the day, the banks did a lot of lending all over the place. And after 2008, the banks kind of withdrew, and these guys really started to pick up on lending money to especially middle market companies. And one of the challenges that they've run into is that a lot of the money that they've lent out to like companies that are in the software and technology space. And so right now, software and technology is not exactly in the greatest of shape in terms of valuation. So people are wondering like, okay, so what's the mark to market on a lot of the loans that they have? Like, are they actually serviceable or are they not? So that's a challenge that you run into. And so the market is generally selling this thing off. But in terms of total return potential, if this thing blows over, this is like easily, in my opinion, like in the next 2-3 years, probably a 300% return. And then on top of it, you're probably going to get about a yield of about 10% right now. With in the future on your current cost, you could be looking at about a 15% compounded growth rate if everything right now gets blown, like basically gets settled. So why would you buy Owl? Yeah, sorry.
Sorry, yeah. I mean, I'm just looking at 5-10 year projections. I mean, it looks just based off of what the headlines are seeing here. Headlines, previous earnings, growth, etc. It seems to be showing up as pretty decent, like you stated. I mean, because it's so depressed right now, the 5 year, it looks like the P50 is currently at $30. So
yeah,
there's cases where it gets worse, but
yeah. Some people are asking in the chat, why not just buy the BDCs? And the truth is, when you buy the BDCs, you're basically buying that portfolio. And long term, if you really want to have it, you want capital appreciation as well, right? So yes, are the BDCs oversold? Yeah, some of them are probably like just selling at a discount to NAV about 30%, but I don't care about that. I care more about future returns. And so when you are managing more money, you get more fees and more things coming in. Over time, you end up getting a better return in my opinion anyway, you get a better return being in the equity position than you do being in the BDC position, where all you're really doing is trying to get back to NAV, right? So I think for me, when I look at this, I'm like, this thing should be worth, from an equity standpoint, probably at least $15. And believe it or not, look at the insider buys on this thing. Insiders were buying last month at like $15 a share. So, and it's not like small time directors. It's like the CEO, one of the major CEOs, was buying.
Yeah. Awards.
I'm sorry if you're an Owl bag holder. I'm sorry, but just remember, if you still believe in the company, this is a good time to average down, right?
Yeah, like you stated, open market buys here.
Yeah,
in December.
Yeah, co-presidents. Like I said, the insiders are buying, so it's always a good sign when
Damn,
insiders
139,000 shares. Okay.
Yeah. This is the one thing you need to. I wish we could make that bigger so that people can see this. Can you scroll into this? There you go. Yeah. And is there any way to toggle this to be white instead of dark?
Let me see.
Or is it just default dark mode?
Default dark mode.
Ah, got it. Okay. It's really hard to see like when you're presenting on a black screen sometimes. Like black on black on black. You know what I mean?
Yeah, no, I hear you. No, it's good feedback.
Yeah. So yeah, like I said, I'm not 100% confident that Blue Owl is the right pick for me just yet. But if there are enough, let me just show.
I mean, do you think that this is all Fugazi then? Like, let me hide these comments really quick.
I think some of their loans are definitely Fugazi, but that's
no. I meant the analysts. So at the moment, and a lot of the analysts rated as buy, strong buy, or 5 hold, but
yeah.
People are really downgrading it. It looks like. So even though Oppenheimer rated it as a buy, they dropped it from 24 to 17, and then Barclays same. They dropped it from 15 to 11. You think that's just because they're trying to save face, or
No. It's because whenever it comes to private equity, private debt, what happens is your ability to get a valuation is based on two things. One is the income that you generate, right? Which is always a paramount thing because you're looking at fee-based revenue and fee-based returns. So the first thing is you need to see that you're generating, fees, right? So that's number one. Number two, you need to make sure that your AUM is constantly growing. Now, the problem is people are withdrawing from these guys because they see some of these redemptions getting blocked. And so what people are saying is, well, they're going to have trouble getting future commitments for management. And so if you think about it, like right now they manage 300 billion and they get a percentage from that. And so that's how you would value it, right? Based on the cash flow that you get from managing that money and getting a return. But in the future, if let's say people are withdrawing and saying, hey, listen, I want my money back, I don't trust my money with you guys, that means that now that's future revenue and future fees that you're not going to be collecting. So that's the challenge that you run into. And so you go from a growth multiple now all of a sudden to a value multiple. And that's what these analysts are basically saying, like, hey, before all of this stuff happened, these guys were picking up a bunch of AUM, like assets under management for these guys was growing at like a very brisk pace. Let me see if I have the information. But now that people are kind of, on the other side of it, you might see people pulling out. And if they're pulling out, especially, at a pretty large swaths, then you have a major problem. So let's see, this is from their fourth quarter. I'm sure that this is going to show the most rosiest thing ever. But so when they were publicly listed, they listed with $62 billion of assets under management. Since then, they've CAGR at 43%. So they're literally managing almost $307 billion of fee earning things. Remember, this is not their money. So anyone buying this, you're not buying $307 billion of assets. What you're buying is basically someone that manages $307 billion in assets. And this is where the money is right now. So direct lending. So this is money that, like, let's say you're a sovereign wealth fund, you're a rich person, you're a wealthy family, you're a family office. Like me and Matt right now, we're starting to get to that point right now where we want to manage our money less. We want to just put it away, leave it to someone who can give us a 7 to 10% return, right? Well, actually, me and Matt are actually money managers, so we would actually manage the money ourselves. We can actually do better than these assholes can. But let's say you're the second generation, right? Like, let's say I pass away and my wife just gets all my money. She may or may not know how to invest it, so she might just go
give it to me. No, I'm just kidding.
I'd actually, believe it or not, I trust her with I trust you with the money. So what would happen is she would end up, going to like an RIA, right? An RIA might say, hey, listen, you can make a decent return by going into this private equity pool, and that private equity pool can be put in, and basically my wife would get some nice income out of it. So a lot of wealthy families that are in their second, third, fourth generation of wealth, they're not concerned with, hey, let's look at the balance sheet of a company, or let's go do this. Their concern is, how do I preserve my wealth long term, and how do I get a return that's acceptable to me to live my life and never have to worry about money again? So they turn to guys like this. They turn to Blue Owl. Of course, you've got endowment funds, you've got sovereign wealth funds, all of those guys, like pension funds. They put money with these big time money managers, and these money managers, the thing that they sell is that the stock market is volatile, right? And the thing that rich people hate, or at least I think that rich people hate, is volatility, right? If you are, if you have let's say you have $1 billion, the last thing you want to do is buy stocks and this thing goes from $1 billion to 500 million, right? And then it goes to like 1.25 and then it comes down. So a lot of them, what they do is they put their money with stuff like this. And these guys, they lend this money out with pretty stiff terms to middle market companies. And basically they work on getting that like deals financed. So let's say I'm a $5 billion company. I want to build another warehouse. Let's say I work in warehousing and I need $1 billion to do in my expansion. Well, I can go to Blue Owl and say, hey, listen, I've got this cash flow. I don't mind paying 8, 9, 10%, whatever the cost is. Lend me this money. And companies like this can actually provide that kind of sizing. Imagine going like, where do you pick up $1 billion of financing? You know? So
Gotta be an insurance company or something. So
yeah, well, these guys, that's the other thing too. Like a lot of the insurance companies put their money with these guys, you know? So this is where basically they have their money parked, you know, in these different things. So yeah, and you know, they give a decent return. So if you see here, 31% of their money is from private wealth, 19 is from insurance, 19% is from public, sovereign wealth funds about 10, and so it goes on from there. So and so the challenge is, if you have any sort of stain on your reputation that you may or may not know what you're doing with investments, it could be a very small investment that goes bad, but if it ends up becoming something that's on you, people, like especially in this category in private wealth, is 31%, they're going to say, wait a second, you're giving out money to people who can't pay you back. I want my money back. And when enough people say it at the same exact time, what you do is you cause a liquidity event, where basically now you're trying to sell a loan that could be like $1 billion loan to somebody. And, you know, it's like, how many people are willing to buy at dollar for dollar that loan? People are going to say, no, I want a discount. I want 30 cents on the dollar because I have you over a barrel. So that's one of the challenges that these guys are sort of running into. It's not just them, by the way. It's all of private equity and private credit right now. So, yeah.
what else are you buying, Mr. Patel? Well, you're not buying out at the moment, you said, right? Or are you?
Yeah, I'm not really buying much at the moment. I'm just researching, just enjoying the run up on Venture Global, which is nice. I think that this, and I don't want to sound like I'm celebrating something that's tragic that's happening in the Middle East, but one of the benefits that Venture Global and Next Decade are going to have going forward is that there was this narrative that there was going to be this LNG glut coming, and everyone is going to, you know, all of these guys are going to have trouble financing. Now I think everyone is waking up to the idea that supply is not stable, right? And you need to diversify yourself away. So some countries, especially India, fuck India, by the way, they thought that they could play this game where it's like, oh, we don't need anyone else. We could just get spot pricing from Qatar. We don't need to worry. You know, it's all good. Like, they're reliable. And now that this is happening, they're like, oh, what are we going to do now? Like, yeah, you're fucked. You're fucked. That's it. Your fucking energy minister, fire that asshole, because he fucked you. He fucked you hard. Now you're going to feel the fucking pain. So instead of being like the South Koreans, like the Japanese, like some of the other countries of Southeast Asia, they signed long-term LNG deals, right, to make sure that they had cargoes coming in. They didn't diversify. And because they didn't diversify, they are going to get fucked. And it's good that they get fucked, because then it wakes people up. You know, so as much as I want to see India grow, and their energy needs are probably more pressing than anyone else, I think there are times where you need events like this to remind yourself that you cannot be in a position where you're solely depending on your energy security on one source of energy. You need to diversify. And in which case, I think at some point these guys are going to have to sign some deals, and things will be fine. And like I said, people who are invested in Venture Global and Next Decade, you know, the demand for the future is probably going to start like becoming bought up, right? In which case now financing becomes easier, your shareholder value gets created from that. So I think some people are recognizing it. Are there still challenges out there? Probably. But in terms of like long-term value, I think Venture Global is going to benefit from this, because now people are going to say, like, wait a second, as much as we like Qatar and we're willing to invest in procuring Qatari cargoes, we also should probably have some cargoes coming in that are guaranteed at a fixed price coming in from the US.
I'm trying to find the right graphic to bring up specifically for India's. Oh, here's a good graphic. Hopefully,
You know, one of the challenges with India, let me be honest, like India has one of this thing, and maybe this is just me just letting off some steam, okay? And there's probably some people in our chat right now that are Indian, and maybe they'll agree with me, maybe they won't, I don't care. We Indians, we need to stop thinking short term. Okay, India, we have this mentality that we can basically just go along with everything that just happens instead of thinking 5 years, 10 years, 15 years out, right? And I've seen this happen so many times where it's like, oh, we want to become the superpower of the world, but all the decisions that India makes are very short term in nature. And I think energy security is one of those that, you know, they just had a really bad time on. And the other thing is they're just very bad at maintaining infrastructure. You know, I don't know why. I do see that there is a bunch of changes happening in India, right? Which is good, but they really need to think outside the box a little bit. You know, they had a perfect opportunity, I think, last year where some of these companies were trading at such a severe discount. What did the South Koreans do? Like you saw with that company from that defense contract, that conglomerate from South Korea, Hanwha. Mm-hmm. Hanwha was buying equity up the wazoo. They were like, let's go. I'm going to buy as much equity in these LNG producers as I can. And then they signed these long-term contracts. And now they're getting discounted LNG and their equity investment is going up. It got to the point where even the Middle Eastern companies like ADNOC were buying future cargoes because they understood one thing. You need to have energy diversity. But India wanted to play that game. And, you know, the other tragedy that I think is going to happen in India, instead of actually even waking up, there's probably going to be a whole set of idiots in politics that are probably just going to be like, oh, well, we've got coal, so it's okay. And they're just going to pollute. That's the other thing, too. Like, India has some of the worst pollution right now. And instead of trying to go for a cleaner alternative, they'll go with the cheaper option, which is, oh, we'll just burn more coal. It's like, because of the stupid concept, because of your stupid short-term thinking, now you're going to pollute yourself to basically make ends meet. It's freaking sad.
Where's the flaw? No.
Yeah, they find.
I used to have a really good chart, and I'm trying to look for it, and I just can't find it. I don't know where.
Yeah. See, even people in the chat that are Indian, like I can see because your names are Indian. Corruption is rampant. That's right. Corruption is super rampant.
See, yeah, I mean, I think that this was something that we always kind of anticipated, right? Is that the world is going to need a larger diversification. Australia is starting to get hit. I mean, I could see personally that India was running out of local production, and they're years away from being able to offset any of that decline. And so, to get to the growth that they need, you need local production and or imports. And at the moment, they're not getting sufficient from Oman, and they need it today. And so, from that, they can't wait till 2030, 2035 when some of these facilities are online. They need it today. So if that's the case, I just feel like that any spot is potentially going to get bought up. And I think what's going to end up happening is because unless there's a lot of green lighting going on, but with what's going on right now in the Mideast, I think unfortunately for those folks in the Mideast, a lot of projects are going to get delayed because there's other infrastructure that probably needs to get rebuilt with some of these attacks that have been going on. So there's likely to be prioritization associated with that prior to executing some of the capacity uplifts that were being expected. So I wouldn't be surprised if you hear the glut talk go away. I think it was already starting to subside prior to the conversation around Iran and everything that's kind of coincided with that. But yeah, I think in that respect, it to me, this is potentially beneficial as next decade, for example, the fourth and fifth trains are only 75% contracted. So could lead to an opportunity for more of it.
So someone
Get
said,
contracted at higher
poor,
prices.
bro, we're a poor country with 1 billion people. Give us a break. Look, man, these are my people, okay? I love my people. I hope India does really, really well over the next 50 years. My problem is that we have this tribal mentality where we're either have, and this is, I think this is something like the British left over for us, but basically destroyed a lot of the confidence in Indian people. And then there's always this sense of it's not my problem thing that I hate. Also, like, it's like, you know, one of the things that you have to be is self-critical. Like, one of the things when I go to India, I notice, dude, people just dump stuff all over the place. Like, if I was the prime minister of India, I would do 3 things. I would say, number 1, clean up. I would make polluting on the streets such a, like, I would go Singapore on these MFers, okay? You know, in Singapore, if you spit your gum on the street, you get freaking like lashes, and they really come after you hard. India needs like a strict ass cleanliness policy where people don't just spit everywhere and fucking piss everywhere. You know, so that's like the first thing, because there's so many public health related issues that go on and actually make things really, really bad. The other thing is just from like this sense of like pride. Don't you want to like live in a clean area? Don't you want to walk down the street and say, you know what? I live here. This is where I come from. And the thing is, in India, when you go, bro, I remember one time we were driving in India, and people just straight up spitting this thing called manikchand. So have you heard of that? It's like this thing that people eat in India. It's like it's like this thing with betel nut. It's like this nicotine kind of thing, right? There's people are just spitting that shit off of a moving bus, and it's like hitting people. Like that's how some people, like, the mentality it is in India. And it's like, come on, man, we got to get some civic sense in us. I mean, younger generation of people are waking up to it, but it's pretty bad. There's just so much corruption and around pollution and stuff that the thing is, the corruption, it's like you allow for these factories to dump all of this waste into like the rivers. And the thing is, like, yes, that local politician is probably going to get paid a little bit of money, but the thing is, the long-term consequences are you have a public health crisis that's going to come up, you know? And it's one of those challenges that sometimes I'm a Republic, I'm a capitalist, but at the same time, when it comes to like the environment, I'm pretty lefty. You know, I think we should control pollution. We shouldn't go crazy with it, you know? Like, and yeah, this is me saying this as a venture global investor, by the way. Sorry, Matt. Go ahead.
I think I'm not for over regulation. I think there needs to be some sort of regulation. No regulation is bad. Because look exactly what Chris is talking about, right? You can't have things that are under regulated because people will just do the bare minimum to make profit sometimes. And so not everyone will do the right thing. So with Chris, you need to have some sort of boundary condition.
And someone brings in a really good point. It's like, Chris, don't generalize India. Kerala is much cleaner. Yeah, you know what? There are definitely areas of India that are very clean. There are probably places in India that are not so clean. It's kind of like here in the US too, right? Like you go to certain cities, you're like, holy shit, did I just walk into the middle of a war zone? And then there's other cities where you're just like, wow, everything's so nice. It's clean. It's very kept. So, but the problem is the generality of this pollution issue is something that I hope, like I said, I hope India does become a superpower, but I don't think it'll ever become a superpower if it doesn't get its cleanliness up, you know, and basically protect its people from the nightmare that is pollution, you know. So
India is basically like American red states. Interesting.
Yeah, sorry, I think I went into too many tangents. Like, that's one of the things about India. Like, I want to see India succeed. But at the same time, like, me and my dad, we talk about it, and just like, me and my dad laugh. Like, all these people, man, they keep saying that we're going to be the next superpower. Based on what? Like, take care of your people. Screw this idea that you want to be a superpower. Be a great power, you know, internally first. Before you start, oh yeah, we can dictate terms to the world. Before y'all do that, fix your own house first. Sorry. That's the last time I'll rant about it. Go ahead.
But no, like, look at this. This doesn't show contracted amounts, but just look at this amount of capacity that's able to be imported, right? So there's importing, there's exporting. Obviously, India is not exporting because they need the gas, so they have to import gas because they don't have enough supply locally. But you can just see um, how much demand is kind of coming through, and this chart's not that old; it's from last year. So yeah, you can see how much it's going to grow. It's going to basically double from 2023 to 2030. Um, and at the moment, natural gas production in the country is not growing. And so you basically are just importing all that. And so if I recall correctly, I think it's like they might have like close to 30, 35 MTPA booked in terms of contracts, but um, the rest is really just uncontracted, like Chris said. So curious to see how they're faring underneath this.
They'll go to coal, bro. That's what they always done. They'll go to the cheapest, dirtiest fuel. I'm telling you, the government does try. They do try to make things a little bit better and everything else, but at the end of the day, there are limitations on how much they can really spend on it, and which case they'll probably end up just burning more coal to keep up like their energy and everything else. So, like I said, it's not a good situation, you know. But I do hope that they wake up. Like if there is any sort of relent to this Strait of Hormuz thing, and you know, you could get the Delta project and CP3 once those come online. I hope these Indian importers, they wake up and they're like, listen, let's goddamn get some long-term contracts in there, so we're never in a position where we have to pay 3, 4, 5 times the current contract rates on spot, you know.
So what else are you buying, Mr. Patel?
Not much, man. Not much. This year is definitely a watch and see year. You know, there's just
Watch and see what, hoping that things make a clear window for opportunity, or you think that things have just run so fast that it's hard to.
There just seems to be so much uncertainty, you know, so any thesis that you can put out right now can get washed away within a very short period of time. Like I'm still long on the cruises. I think the cruise lines are recovering at a pretty decent pace. You know, there's some activist situations happening with Norwegian right now that I'm interested in. The problem that you're running into now is that they're exposed to fuel prices, like bunker prices, and they've hedged, but they're not hedged like super long term. So could they weather short to medium term volatility? Probably. They'll do okay. It's the problem if this becomes a longer term issue, then we're gonna have to deal with it. The other challenge that I'm looking at right now is if this issue with private credit and private equity end up getting mixed into liquidity issues, liquidity shortfalls, then that's another major problem that we're looking at. And then on top of it, if interest rates start, like let's say oil stays higher for longer and now you see CPI starting to climb, future rate cut expectations go down the drain, right? And if future rate cuts go down the drain, financing costs go up. And if financing costs go up, then we got a problem, right? So this is one of those things that if this situation resolves, I think in the next 60 to 90 days, which I think could be possible, I think we have a okay year ahead of us. If it's not, and this becomes more of a Ukraine-like situation and it's not just transitory, I don't know, bro. We could be headed into a recession.
And you think that that's because they're not going to cut rates? You think it's because inflation's going to get reaccelerated?
It's a combination of all three, man. On one side, you've got all this refinancing that was done during 2000 and 2001. All of those loans, those are 5-year loans. Those are all coming due right now. And so the time for pretending and extending is done. So now you've got to refinance a lot of that debt. And if you have to refinance at much higher rates than what you were borrowed at, that means that you're going to eat into profit margins. The other problem is liquidity. You know, if right now there's people out there willing to buy, you know, pay 7, 8, 9%, that means that if you're like not that great of a borrower, you're going to be paying that. The other thing is real estate. I mean, buyer demand is basically like shot, and the amount of inventory is starting to climb. So you've kind of got this double, like, two-way situation happening where we might actually get a reverse wealth effect. That's the other concern that I have. So right now we've got so many wealthy people who've been supporting the economy. Like, so I think the last statistics was like the top 10% of the population is doing 50% of the spending. And so most of them are heavily invested in the stock market and then private equity and all this other stuff. And so if this ends up tanking, or at least marginally goes down, you might actually see like curtailment of spending, in which case now you've got sort of a recessionary wave going to hit us. And so best case scenario is that it's disinflationary. Worst case scenario is that we have stagflation. You know, inflation goes up, earnings goes down. It's like, what the hell? So So I don't know. I think the best thing to do is just wait until this thing resolves. You know. What do you think?
I don't know. I'm cautiously optimistic things are going to work out, but I've been bitten in the past by assuming something like that. So I think it's tough to say right now with the kind of what's going on in the Middle East to kind of give a path forward. And initially, it looked like it was going to be pretty quick, and this is like last Saturday, so almost a week and a half ago. And Steve was asking me, he's like, what do you think was going to do? And I was like, I really don't know. He's like, unless it's a really big conflict, I don't really see it going above 85. Well, here we are over 100 in more recent days. And I don't know. I think maybe the optimist in me wants it to be over so that way, there's less murder. But we know what's happening with Ukraine and Russia. That's still ongoing, and that's been going on 4 years at this point. So it's tough, believe it or not. I can't believe it's been 4 years, but it has been.
Yeah.
So I mean it's a religious thing, right? So it's not like it's a yes, you might have the regime aspect of it, but in the Iranian people might want a change out. But you have a position of people in power that are religious, and you're attacking their religion at this point. You're not attacking a particular country. And so if that's the case, it might end up being kind of like a Vietnam in that respect, right? It's very difficult. And same thing with Iraq. Like it might be more like an Iraq or an Afghanistan, where it's just like you're trying to change a culture, and is that something that you can actually do without trying to take it entirely over? And if you take it entirely over, it's a completely different conversation. So
Yeah.
it's tough.
I don't think that the US is dumb enough. Well, not dumb enough, that's the wrong word, but I don't think the US, after its military adventures in Afghanistan or Iraq, they're going to be willing to put boots on the ground long term. They're definitely not going to try to do more regime change. What they are trying to do, and I think that's the ultimate goal, is to try to dislodge the current leadership and try to get someone. I think there's two goals. Like, primary goal would be to dislodge the current hardcore theocratists, if that's the right word for it, and try to get someone that's more moderate, reformist. I know some people say there's no such thing as a moderate, blah, blah, blah. There are moderates. There's going to be people who believe in the craziest things and people who believe in not so crazy things. The best we can hope for is someone who doesn't believe in the crazy things. And the other thing is, I think Israel is the one that's dictating the war now. No matter how much we want to believe that the U.S. is the main guy behind this, while we are fighting the bulk of this, Israel is dictating the terms of this war. And the thing is, the U.S. is sort of in a position where they can't just abandon Israel now. So even if Donald Trump and they say, like, we want to get out by the end of this month, Israel might just say, well, you can leave, but we're going all the way. And I think Israel right now is in that position. And the US kind of has to decide at some point, like, do we abandon Israel? And I don't necessarily see that happening. So I think at some point, the decision is going to have to be made at the Israel level, where they're comfortable with whoever is left in charge, and give them either the reprieve of negotiating a ceasefire, or a regime change where we see someone that's not as confrontational to Israel long term. So yeah, and the reason why I say that is because even before going into this, it was very clear that the U.S. was trying to be the negotiator in this, and Israel was like, "No, there's no negotiating. They've got nukes. We don't take care of the nukes. It's going to become a long-term issue. We're going in with or without you." And the U.S. said, "Fuck it. We're your friends. We're with you." So it's almost like at the bar, and you got your boy, and this guy is like, I'm gonna go fight that bouncer. It's like, man, don't do that. We're gonna get our ass whooped. And it's like, nah, bro, we're gonna do this. Like, all right, fuck it, let's go, ride or die, So yeah, so we're gonna take our licks. But I personally think that long term, if we do get a more stable Iran that's not hell bent on exporting terrorism and funding proxies and building up a nuclear arsenal, that could be a good thing. The best thing that could happen is we get another Iraq, right? Where now you've got actually a functioning democracy in the Middle East.
Yeah.
We want that.
Oh,
that would be
agreed.
perfect.
You have a country of 90 million people, most of which that I've met personally, the Iranian and Persian people that I've met, extremely intelligent, very fun, loving people. And I have not really met any of the extremists, so I can't really speak on their behalf. But if it's a country full of those sorts of people that want to be progressive and highly educated and pushing things forward for the world, right, in a positive manner, then I'm for it. And it seems like that's been the case, is that for decades now. It seems like they've been suppressed. So
I think let me address one comment. You can't force a country open up with bombs and missiles. That is completely false. That's wrong. You know why? Germany, World War II. Japan, World War II. North Korea, South Korea. Okay. Iran, Iraq right now. The reason why we went in was wrong, but the end result is actually positive, net positive right now. Are there areas where we fucked up? Plenty. But are there areas where we've done good? Plenty. So it just depends on how we end up with this situation. So I don't know. Hopefully, from my experience, I think if you give the Iranian people the ability to, like the general Iranian people, I'm not talking about the hardcore religious zealots, I'm talking about the general people. I think they're just normal people that want to live a good life. They don't have this animosity towards Israel, like, oh, we need to destroy them, like America's the great Satan and all that shit. A lot of that stuff is just propaganda that, in my opinion, that the government uses to control the masses. That they're like, oh, our entire goal, like we're all Muslims and our job is to make sure that Israel is taken out. And I think that's the wrong way of looking at things. And there are plenty of things that everyone should be critical of Israel. Like, I see certain things where these like religious zealot settlers just showing up on Palestinian land and saying, this is my home now. And every time I see that shit, I tell me and my wife, talk like, bro, if some asshole showed up on my piece of land trying to say like, oh, this is mine all of a sudden, I'd be the first one to shoot that motherfucker, Yeah. So I totally understand where some of these people are coming from. So I think at some point, even the Israelis have to take accountability and says, control your goddamn settlers, because they're literally thinking that God promised them a piece of land. It's like, no, you can't do that. Like, you got to enforce some kind of fairness. So do I think that Israel is blameless in all this? Absolutely not. But do I think that the only option is let's go, let's just destroy this country and state of Israel and kill all the Jews? Like, no. And that's in what the Iranians, like the current regime, that's their current like manifesto right now. So,
Interesting.
Yeah.
Let me think. What else am I mean, I'm still accumulating Amazon, still accumulating S&P, as always. Bought a little bit more Ethereum while it's down. I mean, not doing anything too crazy out of the normal, other than those quick swing trades on ServiceNow that I did, and what was it? ServiceNow? I think I did another one too. But
Yeah, we've got Adobe coming in. You know, Chris is not a good stock picker, but he appears confident, but needs much improvement. Not bad though. Okay, maybe I'm
are you here first?
bad stock. I'm a pretty bad stock picker, I guess. Yeah, whether you agree or not, but I love when Chris is going off. Nah, man, I need to control myself. I know that somewhere along the lines, I'm gonna get a call into HR and be like, "Hey, let's talk." You know, did you say that a bunch of Indian people are just a bunch of dirty Indians? And then I have to tell you, like, no, I'm not saying that. That's not what I meant. I don't think Indians are a bunch of dirty Indian people. I'm Indian, you know, but yeah, so yeah.
No, I did sell service now. Sorry if that was confusing. I
Yeah.
swung trade service now. I forget how much I made on that. It wasn't a lot, but it was enough. It was a couple grand. A little bit of a paycheck. So yeah, there you go with that. I don't know anything about what's going on in Jamaica. I knew there was some wildcatting going on in Jamaica, but I don't know what exactly. So the person that keeps asking, sorry. I haven't kept up with that. Have I bought any more BM&R? I haven't, but I've thought about it today. Actually, I thought about buying more, and I've a couple months left of buying. So what I'm actually thinking about here, Chris. So I have some cash. I think I told you that at the beginning of the stream. It's probably some of the more cash position I've had in a while.
Let's go to Vegas and blow it, bro. Screw that. When are you gonna get a chance to just go crazy?
I know.
Let's just go to Vegas, put it, and just have a suite at the Caesar's Palace, and just have a good old time, man. Let's go.
I need to.
That's the way to do it. What are you gonna do the rest of your life? You're just gonna keep accumulating money? Come on, let's go blow some of it, man.
Trying to be like you, man. A high flyer. So yeah, I think I have a couple months left on my car, so I might just pay that off and then use, because that's a couple $100 a month. I might just see, okay, well, now that I have that paid off, how am I going to spread that $700 a month, right? And figure out what payments am I, because it's like I'd split my payment in two. First half of the month, second half. Oh, excuse me. So I might see where, and some of that money might go and end up going into BM&R.
How are we doing with the portfolio?
Honestly, I haven't checked. Let's see.
Let's check our YouTube Moolah portfolio. See how we're doing.
Sorry, guys. I have to hide account numbers and shit.
Ooh, Microsoft is down. Everything is down. Jesus, man. Come on. What are you doing?
You to buy more Microsoft?
Yeah. Microsoft's an easy win. I told my brother too. I was like, just high class the portfolio, buy companies like Microsoft, Amazon. They're not going anywhere. They generate crazy cash flows. They can. And the other thing is, like, people are saying, oh, there's going to be like disruption on the seat-based model. And I'm like, yeah, that's true. But at the same time, their Azure business is growing. Like, literally the RPO is going crazy. So I'm like, look, some people could imagine some weakness in Microsoft, but long term, I think it'll be fine. So. There are some opportunities here and there with fixed income, but once again, I don't know how they're going to do mark to market on some fixed income stuff. So like I sold all my PDI and I ended up just buying some other stuff with it.
You're a high flyer. What'd you do with the PDI? Or after you sold it, what'd you end up buying with it?
Microsoft, and I bought some Norwegian as well. So
what happened to the fixed income for life, man?
That's gonna do well, I know, but once in a while you got to take an opportunity. Sometimes you got to get that capital appreciation too, bro.
Too short-lived for your boy Mateus.
Yeah.
Too much damn trading. You and your Discord.
We'll get there. Hey, listen, the reason why we are up is because sometimes you got to sell.
Yes, I agree. Let's see. Share. Make sure. Sharing. Let's see. Where's the full slideshow mode? Ah, shit. Oh, whatever. Good enough. So VG is the largest position that we have. It's up 37%. So that turned around because it was not up 37% at one point. We trimmed Verizon entirely, so I forget how much we made on that, but we trimmed that. I believe we bought Microsoft associated with that. So here's the money that we sold out of Verizon and went into Microsoft. We're still down on Next Decade, which is fine. Meta, we're up 6%. Rocket Lab and ASTS, we're up over 200% apiece. Amazon, we're up. Region, Oscar, Weeble, man, that one's not been bueno. Eventually, that one's got to turn around, unless they had a bad quarter, which maybe they did. Maybe that's why.
They're just so slow to growth, man. I wonder if that's one of those things at the end of the year we should just take the tax loss harvest and move the money to something more with a higher conviction.
Yeah, probably. The Amazon 2X, I forgot we had the Amazon 2X, to be honest with you.
Okay. Oh, nice. You started selling covered calls again on our Venture Global. Nice.
Yeah. And
I was going to tell you to do that too.
For people that don't sell covered calls on VG, don't be afraid, because it's always going to take the ask price. And so if you were to actually go and buy back the 17.5 call, it probably is not going to be 35 cents. But because it's so illiquid, it'll show 35 cents and it'll show that you're down massive. I had so many people reach out to me like, why does it show that I'm down 100%? Like, I just sold it. It's like, dude, it's really illiquid, a lot of them.
Yeah.
So and very few strike prices. So it's just one of those things, man, where it's not.
Fidelity does that.
Comforting.
Fidelity has this. Fidelity is horrible with that. So they have like mark to market. So sometimes what I'll do is I'll look at my portfolio on Fidelity, and if I have spreads, what it does is it takes the worst of both sides, both legs, and it looks like I'm screwed. So but then like overnight at 3:30 in the morning, everything looks great again. So
yeah, it's just one of those things where it's illiquid, so it's not the best stock to write options on because of its illiquidity, but you can still make a little bit of money. So.
Yeah, I think just high classing the portfolio with some conviction names might not be a bad idea. So we've got 233 in cash. Yeah.
What's that?
No, we've got like 233 in cash.
Yeah, it might be worth to consolidate some of the positions and.
Yeah.
So where do you think we're at?
Like what, year to date?
Year to date in 1 year.
I'd say year to date we're probably up 10%, and long term we're probably up 30.
Man, you have no confidence in us, do you?
I don't know, man. Let's take a look.
No confidence.
I'm bad with this.
Year to date we're up 19%, and we were up again today, right?
Yes,
yeah. Oh wow, we were up way up today, so we're probably going to break 20 for the year to date, and then we're up 71% over the last. That VG turnaround really helped us out.
Yeah,
so, we were not looking so bueno.
I wonder if at some point we should take a little bit of money off VG and just park it in some other stuff. Not yet. Not until this thing becomes.
That leads me to one of the articles that I just wrote on. Probably. So I'm going to start publishing articles on here just so that people can kind of see it. And they're not going to be as in-depth as like Seeking Alpha and stuff like that. But the hope is eventually, once ads kind of come through and AdSense starts allowing me to get some monetization, that I can help pay people to write articles. But I think next, once again, it's a 12 to 18 month thing. Even more so, like that, the 12 to 18 months just the beginning of catalysts, right? I'm not saying in 12 to 18 it's going to go up 50% or 100% or anything like that. What I'm thinking is that it's going to help with putting a floor price. And so basically where we're at is, if you listen to the last conference calls and release, they basically were saying, hey, by this end of this year, Chris, they should start to actually introduce gas to the first and second trains. And so they're not going to be exporting, but the hope is that within close to the next 12 months, maybe 15 months, they basically stated first half of 27, they should be exporting. And so, you start to think, you're like, okay, well, you're going from a basically zero revenue company that is only spending to now actually generating revenue and basically being able to start paying off some of the debts that they've accumulated. Yeah. And that is something of what I would see as a floor. And so you're kind of getting this window where, like, when we first started talking about this company in 2024, it was kind of like, oh, you got forever, you got 3 years until, well, I don't think people are fully recognizing is like they're ahead of schedule, right? They were supposed to start exporting by the second half of 2027. And for a while, people were like, oh, with this regulatory stuff, we'll be lucky if it's 2028. Well, now they're saying they're actually going to potentially export in the first half of 27. So we're talking about I don't want to say a pendulum swing, but we're talking about some advancements here. So there's that. I'm not going to say that it's going to go from like $5 to $15 or anything like that, but I think it's going to establish a floor at the $5, $50, $6 range. And over time, as you get more and more revenue and commissioning and cargoes going through, you'll be able to hopefully get a floor price for this. So if you guys are interested, I'll leave the link in here. It's pretty short. It's only 300 words, but my hope is to kind of go through and start doing this on a lot of my stocks. So instead of doing it through like a Patreon or like a Seeking Alpha, where I have to go through all like the, did you dot your I and cross your T? I'll probably just do it through probably. Sorry, I keep saying probably. But hopefully, as it gets monetized, we'll be able to help pay people. So if Chris, you contribute, you get paid based on views, and hopefully it'll be more than what you'd be able to get on Seeking Alpha. No, seriously. I mean, so hopefully it can pick up, and appreciate everybody that's looked at it so far. So.
Yeah, man. I think this year is just going to be a little weird. There's just so much volatility. I don't know where to really like look for value other than just the safe stuff. I mean, AI trade is there, but I'm pretty long on NVIDIA, which has been doing okay. This Oracle thing helped out a lot. I was thinking of buying some Oracle, but I decided not to, and then it rode up, and I'm like, is the bullishness kind of built in now? So I don't know. We'll see. But year to date, I'm up about 12%, which is good.
Yeah, what am I? I'm not sharing. Okay. Yeah, I'm not sharing. Where am I at? Year to date, I'm only up 3.5. Last year, one trailing 12 months, I'm up 152% in my biggest account.
Yeah.
Yeah, that's my biggest account. What's my Roth? My Roth is going to be stupid.
I'm flat right here this year on my retirement because like I have a lot of Fidelity Contra Fund, and that has mostly a lot of tech exposure, so that's been pretty flat this year.
My Roth, because it's mostly Venture Global, Next, and Rocket Lab.
Yeah.
Trailing 12 months, 332%.
Congratulations, man. It's freaking awesome.
Pretty well.
Yeah.
Yeah, pretty well.
So we're gonna sell it all and retire and just chill. We could just go to random places on the earth, put it all into some nice long-term bonds. What do you think? Or are you trying to go for the private jet money? Private jet money? Is that the goal? Private jet status?
I mean, it's like that episode of Succession. They're like, well, they told me that if he dies, then I get the $5 million. And I'm like, that's awful. Poorest rich person alive. And I'm like,
it's like you make enough to get business class, but that's it. Like going to first might be a bit of a stretch. It's definitely not flying private. That's for sure.
No, yeah, no private. You like you're able to go to like a couple F1 races, but you're not at every one. Like some
Hmm.
people want to be. So I don't know. Private jet money
But
is a
you,
lot. It's a big
but
step
you've
up.
got time. But you've got time on your side. So time is what actually matters, right? So I think the key to make people a good investor is if you have a lot of money, you don't need a lot of return to live a really good life. And if you don't have a lot of money, then you got to swing at too many things. So I think sometimes it's like once you get to a certain level of wealth, actually becomes easier to invest because you can ride out the volatility that someone who doesn't have as much. Like me as an investor with 100,000 versus me as an investor with way more is two different things. So like right now I can survive the volatility because the number is high. But like if it was much lower and this is like money I needed to live off of or survive, then I can't, necessarily take the risk sometimes and I'd have to sell things. It's like a different mentality. So but I do
Yeah,
think
it's
at some point we have to go and enjoy our life, man. So when you were asking about what do I do with my bonus, bro, let's go spend that shit, bro.
yeah, I don't
Uh,
know. I need probably starts generating AdSense money, and then I got to still do the YouTube thing. Then maybe we can enjoy more of it. But people
yeah,
like pay off debt. What debt? I mean, other than the houses, I ain't got no debt.
yeah.
I think I got the
Proud,
car payment. Other than that,
I'm proud of my wife. She's almost done with her student loans. So
it's
after
gangster.
that, like I don't have any student loans. My wife won't have any student loans. The only loan that we'll have is like the mortgage that we have on our condo, and that's it. I think the car payments like that's about it. And it's like we live a pretty like I don't know how to describe. We live a pretty good life, you know.
Yeah. No, I mean, I feel like I'm getting really close, man. Where it's like, um, I'm trying to figure out what's the next step. Like, part of me is like, oh, this house that I'm living in, it's okay, but I'm not proud of it. So I'm like, do I buy a new house in Houston and then
Mhm.
sell this house or rent it out? And it's like, or do I? I've actually thought about this as well. It's like, do I sell this house, use the equity, buy a place that I eventually want to move back to in the Northeast,
Mhm.
and just rent? You know, um,
Yeah,
so
come through, man. The Northeast is where it's at. Come home. Well, technically, I'm
yeah,
not in
but
the
then it's like,
Northeast
what do I
anymore.
buy? Do I buy like a house or do I buy like a beach house and just rent it out in the summer? And then, um, I don't know.
Just don't lose it to your first ex-wife. That's the only thing. It's
I
hard.
mean, no
Well,
women are
hard
interested in
for.
me, so I don't think I have to worry about that. No
Well, there you
women are
go, Chad.
interested.
There you go, Chad. If you're a young lady looking for a sugar daddy, Maddie's got you. He'll take you on his business class flights.
They can write economy. Probably why I'm single.
Probably why you're single. There you go. Uh, all right, I think that's it for the day. Yeah, unfortunately, guys, there's just not a lot of great things to look at right now. The only thing I see people chasing is people are chasing war, right? So they're like, I'm buying defense contractors. Some people are chasing AI periphery semiconductors. So that's been working for some people. Uh, yeah, and that's about it. I think there's a mean reversion play probably somewhere in SaaS, but you have to be very careful. You can't just buy into any SaaS. You got to be pretty specific. So, yeah. Yeah, I see some people talking about like Kraken Robotics. By
Yeah, a
the way,
lot of
what did you
people like
what did you
Kraken.
think about HIMS?
Oh, the Novo Nordisk partnership.
Mm-hmm.
Pretty surprised, but
Yeah,
not at the same time. I don't know.
I'm doing a little bit more digging only because there's some there's some talk about peptides that could end up working really, really well for HIMS. But once again, it would be something very speculative. So I wouldn't necessarily want to park too much money into it. But like I said, if it hits, it could end up being something that drives HIMS much higher. But then again, I would be very. Cam is like, look at Copart. Yeah, I know. I'll look at Copart, Cam. I'll have to take a look. I think that's it for today, though.
And nobody wants Ozempic. They want the legal steroids.
Yeah. You know which one to look at, Matt? Look at Reddit TrueChide. Do some digging on that because that's Eli Lilly's thing that's going through FDA approvals right now. Reddit TrueChide could be like the biggest blockbuster in the history of medicine.
What does it do?
So normally with a GLP-1, you've got two things that happen. So you've got GLP-1 and then GIC. My wife could probably explain this better than I can, but they impact two different mechanisms by which, you know, it controls your appetite and suppression and controls your glucose. There's this third element that's being put in there that basically makes you burn fat, like, but it doesn't like have muscle loss. So a lot of like these influencers, they've started taking it to lose weight. And so what's happening is it's actually just burning off a lot of fat. So it's not, so with the first round of like GLP-1s, when people took them, they lost weight on them because of just appetite control. The second generation, like with like Manjaro, you know, helped with that. And then this third generation that's coming in is supposed to like supercharge weight loss. Like some people like have reported that they've lost like almost like 24 pounds. I mean, 24% of their body weight in such a short period of time. And so they've actually had to been taken off like basically limitless shit. Yeah, that's a real peptide. Yeah. Let me see if there's like a YouTube video on it.
You're saying it wrong, Chris.
I'm saying it wrong. GLP-1s cause muscle wasting. Yeah, but Zoe, this one is a little bit different. So let me show you. Hold on. And right now there's people taking it, but they're taking it like it's technically like, what is it called? Experimental. So they're able to get sources, but technically and I don't want to show anyone this thing. I think people can do their own research because the last thing I want to do is try to like tell people like, oh my God, this is like something that you can use to lose weight and all that stuff. That's something you should discuss with your healthcare provider. But yeah, it's something that's happening in the background that not a lot of people know about. But if you just look up Reddit TrueChide, you'll see just how big of a thing it could end up becoming. So yeah.
That's why they pay the big bucks.
Yeah.
All right. Have a good evening at work, my man.
Yep.
Don't work too hard.
Have a good one, brother.
All right. Thank you, everybody. We will see you next time on the Cashflow Chronicles.
Yes, sir. Take care.
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving! Sell it all today.
Or look at it say.